Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to be hearing about topics that are important to the home business community. Okay? All right, so let's talk about this title. Okay, there's a story. All right, so Grant Cardone, who is a great entrepreneur. He is a great real estate entrepreneur. He did a live broadcast, and I do believe it's on his podcast, where he was talking about tax deductions. And I listened to the broadcast, so I want to talk about that, because as I watched it and I watched the response of the people on the broadcast, like, I really want to clear up some stuff, because some of the stuff that he said is misleading. Okay. There is truth, but what do I tell you? You got to know the rules. Okay. So it's not to say that what he was saying is not true. It's just that there are some rules. And, I saw some people, doing hallelujahs and, virtual backflips on Facebook, because they're like, oh my gosh, I had no idea. So yeah, but I'm going to come to you and really clear up some stuff. Okay. So again, understand that he is a real estate investor, a real estate entrepreneur. I'm not exactly quite sure how he does all of his real estate investing, but his company owns his properties. So that is something completely different than a home-based business owner. So I want to address that. Okay. So number one, he talked about you can deduct putting in a pool. Okay. Please do not go and put a pool in your home thinking it is tax deductible for you, because you as a person own your home. Deducting the cost of, no, you cannot put a pool into your backyard and deduct it as an expense. No. All right. That's just a no. Number two, the country club. Now I'm going to spend a little bit of time here on the country club, because I've seen a lot of 7-figure earners go and tell people that they can go, because they're millionaires, that they can go and deduct the cost of a country club, the country club membership, as a business expense in order to entertain their guests. Can I tell you that the IRS explicitly states that you cannot deduct the cost of a country club? Now, the membership. Now, if you take someone out to dinner, right, at your country club, then you can deduct that cost, but the actual membership, no. Now, if you own a rental property and a country club membership is a perk, then perhaps, as a perk to the renter, to the tenant, then perhaps, but just on a regular day, you cannot deduct the membership at the country club, the golf club. I don't care. No, the IRS explicitly states that you cannot. All right. All right. Number 3, receipts. Now, one of the things that he says, oh, my accountant is always whining, you got to give me the receipts. And he went off and said, his American Express and whatever credit card statement, those are his best assistants. That is incorrect. Okay. You need to have your documentation, because what happens is this: in the event that you get audited, you have to prove your expenses. The best way to do that is with documentation. Now, the rule is that and this is kind of a 3 and 4, okay? The rule is that with your receipts, that you don't have to keep a receipt under $75. However, do not use that as an excuse to not keep up with your receipts. Why? Again, because when you are being audited, you are guilty unless you can prove yourself innocent. So for me, I don't care if you spend 35 cents. Keep the darn receipts, because it's better for you in the event that you are audited to be able to produce this paper than to fight over a credit card receipt, a credit card statement. Okay. You also have to understand that Grant Cardone got some deep pockets. He can go hire the high-powered attorney to go fight with this mess. But when a tax attorney tells me, boo, you need to have your receipts, I'm going with the tax attorney not Grant Cardone, because Grant Cardone is not going to pay your legal bills. Okay, he got deeper pockets and he can hire these attorneys. Your pockets ain't that deep to go deal with the IRS like that. I'm just going to put that right on out there. Okay, so save yourself the headache. Keep the darn paper. Like I said, for the for the law says again that under $75 you don't have to keep the receipt. That's all well and good, but I'm telling you, and if you talk to any other tax person, they are going to tell you the same thing, that yes, that is what the law says. However, a best practice is to produce the darn paper. Okay? Because when the auditor is saying we'd like more information on this, being able to provide said information makes life way easier for you than for you to have to go hire somebody to say, and go have this fight. Okay, that's all I'm saying. So yeah, I know what the law says, but I'm telling you, if you are in my circle, if you look at me as a tax expert for you, keep the darn paper. I don't care if you make a copy of it, scan it, get a digital copy, be able to produce the paper. All right, so that was 3 and 4. Number 5, he says, get into network marketing for the tax write-offs. Okay. Getting into network marketing for the tax write-offs is not a good idea. Period. Because the reason is that when you first get started in network marketing or any business, whatsoever, you're going to be investing before you really have had the time to sell anything. So you are probably going to be operating at a loss. That is going to help, that is going to offset other income. Okay. Now, the thing about it is that you got to start making some money, right? You really have to start making some money, because what happens is that people sit there and go, woo, all these write-offs, glory, hallelujah, we got all these write-offs. Okay, but then when you start, year 3 and you're still showing a loss, okay, that's when the IRS will come for you. Okay, this is not some theory. This is what I know. They will come for you. Because see, then they're gonna send you this nice letter that says we'd like some more information on these expenses. And if you can't produce the information on these expenses, guess what? They're gonna disallow the expenses. And at the same time, you might even be able to produce the paper and everything, but they're going to look at the big picture. Are you putting in the time to actually make money? Like you're putting forth the effort to try to make money. They're going to look at your calendar. They're going to look at, did you get help? Did you consult a business coach? Did you consult someone besides your sponsor who has a financial interest in you staying in the company and buying more stuff? Your sponsor is not your business coach. Your sponsor is not your tax professional. Okay? Period. These are the things that the IRS looks at to determine whether or not you are in a business, or if they consider what you're doing a hobby. If they consider what you're doing a hobby, they are going to disallow those expenses, and then you're going to have to pay some money back. I'm telling you what I know. Okay? So, if you saw this, live broadcast, one of the things that he said was absolutely true. You have to be making money. You have to be making money, and you have to be paying taxes. Most people come to me, they want to know how to get a refund. I'm a business owner. How do I get a refund? Business owners don't get tax refunds. If you are operating your business the way you're supposed to, if you are growing your revenue the way you're supposed to, you will not be getting refunds. You will be paying. Okay? You might wind up overpaying, but you're going to pay. And I need for you guys to get this. And one of the other things that he says, yes, I pay my taxes quarterly. And at the end of the year, they send me a refund. That's right. He pays taxes quarterly. And so if you have a corporation, then if you have a tax liability of $500 or more, you will be paying quarterly taxes. That's the name of the game. And if during the year you overpay those taxes based on your current year's income, that's when you get a refund. Otherwise, thou shalt pay. That's just the way it is. Now, the other thing that I don't want to happen is I don't want you to sit there and go, oh, I'm going to go and establish a corporation. If you're not making money, you do not have the revenue to run a corporation the way that it should be run. Flat out. I got people who have S corporations who are asking me, can I get this done at the volunteer IRS service? No. If you have a corporation and you don't have the money to sustain a corporation, then you don't have a business. So do not run out here and set up a corporation thinking, oh my gosh, this is going to help me save money. No, that is not it. You need to focus on making money first in whatever it is that you do. Okay? Please understand, this is why you set aside money for taxes, because if you're a business owner and you're doing what you're supposed to do, you should be setting aside money for taxes. Plain and simple. You don't get to make money and not pay. That ain't the American way. Okay? So, so like I said, Grant Cardone is a fantastic real estate entrepreneur. Okay. But there are a lot of home business owners that follow Grant Cardone, and you have to understand that you ain't Grant Cardone. Okay. If you have a home business, then your structure is probably not the same as his. And you need to really get that. Like, please understand. So, yeah. So that's what I'm saying. During tax time, everybody wants to be a tax professional, okay? They really do. They want to sit there and tell you, oh, this is how you can loop it and swoop it and all of these things. But I'm telling you that you have to put these things into context, and you have to really consult with the people that do this as a profession, because a lot of times these, people, although well-intentioned, give you just enough information for you to be dangerous, and trying to be dangerous and dealing with the IRS, that's not cute. Because if the IRS winds up coming for you, then that half information, whoever gave it to you, is not going to be there at the audit. They ain't going to be the one writing the check. That's going to be you. So I encourage you, when you get these little tips, that you consult an actual tax professional, okay? Somebody with an EA behind their name, somebody with a CPA behind their name, some professional that can really help you navigate the law. Because what do I tell you? I help you win the tax game. What's the first step to winning any kind of game? It's knowing the rules. And when you break the rules, you lose the game. So with that being said, okay, so we're going to wrap this up for today. So yeah, when you get these tax tips, guys, make sure that you consult with somebody, with a professional, and not just take it at face value, because that's how you wind up getting a whole bunch of trouble, and the IRS is not the place to be. Okay. So thank you guys so much for tuning in to Home Biz Tax Talk. Again, my name is Lysandra Everett. We air Monday through Friday, 9 o'clock-ish, and you can come here and get your questions answered about your home business taxes. All right. Have a great day, and I'll see y'all next time. Bye.